to the next point. We should ensure whatever we say is clear.
That means work is being done. We can see that it is in opposite direction.
Hello, students, listeners, and viewers at home. I am Blessing Ayuba Samson, one of your teachers in financial accounting, teaching SS1. I'm here today again to present a part 2 of the topic, Principles and Practice of Double Entry. We are going to talk more on subsidiary accounts. Subsidiary accounts, they are books of first entry, just like I told you in the last class. Before any entry can be made in the ledger, they have to go through a subsidiary book. It must be first recorded in a subsidiary book before they can be transferred into a ledger. Reasons for subsidiary books. Listed on the board are 2 reasons for subsidiary books. One of the reasons is to know the total sales and purchases. As a businessman or woman, when you open a subsidiary book, one of the reasons of opening a subsidiary book is to know or to determine the total sales and purchases that has been made. Secondly, to keep track of the people to whom money is owned and of people who owned money. Subsidiary book is used to keep track of people. If you're having a business, you owe people and people owe you. When you open a subsidiary book in your business, you can be able to determine the people that are owing and the people that you're also owing. Subsidiary books can also be used to record credit sales and credit purchases. As a business person, you collect credit from manufacturers. We use subsidiary books to open such accounts on credit sales and credit purchases. Subsidiary books can be divided into 7 books at most. First, we have the sales day book or the sales journal. Number 2, we have the purchases day book. Number 3, we have the sales return or the return inwards. Number 4, purchases return or return outward book. Number 5, the cash book. Number 6, we have the general journal or the principal journal. Number 7, we have the petty cash book. I have listed these divisions. I am going to take a brief explanation and give examples in following. Number 1 is sales day book, or we say the sales journal. This is a book of first entry in which credit sales are recorded. A sales day book is used in recording a credit sales before they can be posted into the ledger. After making a total sales on credit, it will be transferred to the credit side of the sales accounts in the general ledger. That's to tell you that the sales day book is used in recording credit sales. And after the total sales, when you're opening a sales day journal, you post every transaction to the credit side of your account. Then under the sales, we have what we call the trade discounts. They are simply a percentage deduction from a retail sale, where a manufacturer can give the buyers a discount on what they have come to purchase. Let's take it. Trade discount are simply a percentage deduction from the retail sale. It is normally given to the buyers by the manufacturers. For example, enter the following transactions of Femi and Sons Enterprises in the sales day book for the month of August 2016 and post to the ledgers. August 1st, 2016, sold to Roger Mill 20 bags of sugar at 40 naira each, 12 plates at 140 each, 140 naira each. Then on August 12th, sold to Shola 12 bags of cement at 45 naira each, 5 bags of tea at 15 naira each, and Shola was given a trade discount of 10%. August 27, sold to Muibat 15 shoes at 65 naira each, 100 packet shirts at 13 naira each, and Muibat also was given a trade discount of 5%. Now we are going to take the solution on this example by writing the heading, which is our sales day book. Then we have our dates, particulars. Our F stands for folio, which is what we use to trace any transaction. Then we have details and total. August 1st, 2016 was the date for Roger Mill. Roger Mill bought 20 bags of sugar at 40 naira. So if you times 20 times 40, you get 800 naira. 12 plates at 140 each, which is, if you times 12 times 140, you will get 1,680 naira. If you sum up 800 plus 1,680, you will have the total of 2,480. Shola Limited. Shola Limited purchased 12 bags of cement at 45 naira. 12 times 45 will give us 540 naira. 5 packets of tea at 15 naira. 5 times 15 will give us 75 naira. When you sum up 540 plus 75 naira, you have 615 naira. And we were told in the question that he was given a trade discount of 10%. His total money is 615 naira. So you have to take a discount of 10% from 615 naira, which is 10 over 100 times 615, which will give us 62 naira. And every trade discount has to be less. If you sum up this figure, you less 62 naira, you have a balance of 553 naira. On August 27th, Muibat Limited. Muibat purchased 15 shoes at 65 naira each. So 55 times 15 will give us 975 naira. Muibat also purchased 100 packets of shirts at 13 naira each. 100 times 13 naira will give us 1,300. When you sum up 975 naira plus 1,300, you have the balance of 2,275 naira. Muibat was given also a trade discount of 5%. So we have to take the discount of 5% of 2,275 naira, which will give us 114 naira. When you sum up all these figures and minus 114 naira, the balance that we have is 2,161 naira. If you go up, all on your credit side, you sum up all of the calculations, you sum up all of the figures, you arrive at 5,194 naira, which will be transferred to the sales account. Now, this is our sales account. Our sales account, this is a ledger. After the subsidiary books, you transfer all your transactions into a ledger. And at the beginning of our topic today, I defined sales account. I said whatever purchases or sales that you made, at the end of the day, the total sales will be credited to the sales account. And our total sales is 5,194 naira, which is our sundry. And you can see that it has been credited to the credit side of the account. The sales account is collecting 5,194 naira. Then Shola account has a debit side and a credit side. All of the transactions are going to be on the debit side. The sales that Shola made is 553 naira. Roja account, Roja made a sales of 2,480 naira, which is going to be on the debit side of our account. Muibat made the sales of 2,161 naira, which is also on the debit side of our account. When you sum up all of those figures, you find out that it amounts to 5,194 naira, which will be credited to the sales account. My students, I know you know what is credit. Whenever something is credited to your account, money is coming into that account. B, purchase daybook. Purchases daybook. What is purchases daybook? This is the book for recording goods bought on credit from the suppliers. It's different from sales daybook. Sales daybook is the recording of the total sales and purchases that is made. But when you buy goods from suppliers, you open a purchases daybook, and it's going to be recorded daily. You enter it daily. It's a daily transaction. Now let's take an example. Write up the purchases of Jonah of Abubakar and Sons. Let us write a purchases daybook of Abubakar and Son and post to the ledger for the month of September 2016. September 12th, Abubakar bought from Coca-Cola 12 crates of Coke at 240 naira each, 5 crates of Fanta at 120 each. Then he has a trade discount of 20%. September 17, bought from PZ Limited 140 bags of flour at 10 naira each, 400 soaps at 2 naira each, and it was subject to trade discount of 10%. We have the same format of opening a purchases daybook and a sales daybook, but the difference you will see as we go along. Now, this is our purchases daybook. Our dates, our particulars, our folio, details, and our total. You can see that they are carrying the same kind of format when it comes to calculation. On August 12th, this is Abubakar's purchases daybook. And the particulars is Coca-Cola. They are the ones that are supplying goods for him. You will write Coca-Cola under your particulars, and the transaction that is made will come under. They bought 12 crates of Coke at 240 naira each. When you multiply 240 times 12, you will get a total of 2,880 naira. They were also supplied from Coca-Cola 5 crates of Fanta at 120 naira each. 5 times 120 is 600 naira. They have a discount of 20%. 20% of the sum, which is 3,450 naira, will give us a minus of 696 naira. When you sum up the whole of this figure, our total is 2,784 naira. PZ is under, PZ made supplies to Abubakar and Son, 140 bags of flour at 10 naira each, you have 1,400. 400 soap at 2 naira each, we have 800 naira. When you sum 1,400 plus 800, we have 2,200. And they have a discount of 10%. 10% of the total sum, which is 2,200, will give us 220 naira. And when you sum up, when you take 220 naira, minus 220, the total is 1,980 naira. When you sum up the whole transaction from Coca-Cola and PZ, we will have 4,764 naira, which will be transferred to the purchases account. Now we are going to open a ledger for this account. The difference between the sales day book and the purchases day book is that in the sales day book, whatever is the total sales will be credited. But when it comes to the purchases day book, my students, you can see that it is debited because it is from the suppliers, it's on credit. So our total sundry is 4,764 naira, which is on our debit side. Then you can see another difference from the sales day. In our sales day book, the transaction was on the credit side, on the debit side, but on the purchases day book, individual transaction, company transaction is on the credit side of our account. August 12th, they made purchases, 2,784 naira, which is credited to Coca-Cola. Then, August 12th, purchases from PZ credited 1,980 naira. Number C, purchases returns book. This is the book for recording goods returned to the suppliers as a result of one reason or another. For example, it can be through defectiveness or damages. When you buy goods, it is returned back to the suppliers. They might supply goods to you, and when you get back to your office or your business place, you find out that these goods has a defectiveness or they have a damage. So what do? This is how you write up a returns book, a purchases returns book. Write up the return outwards journal of Khalifa and Sons Limited for the year ended 31st August 2016 and post to the ledger. October 15, return to Coca-Cola Limited 6 crates of Coke at 240 each, 1 crate of Fanta at 120 each, with a trade discount of 20%. August 20th, return to PZ Limited, 14 bags of flour at 10 naira each, 40 soaps at 2 naira each, with a trade discount of 10%. All these goods were found to may be defective or other reasons, so they are returned back to the company. So this is how the solution is going to look like. Purchase day book. October 15, Coca-Cola Limited is our particular. 6 crates of Coke at 250 naira each will give us 1,440 naira. 1 crate of Fanta at 120 each will give us 120. If you sum up these two figures, it will give us 1,560 naira. Then you less the discount of 1,560 naira, which is 312 naira, and our balance will be 1,248 naira. October 20th, 14 bags of flour was returned, 10 naira each. When you times 14 times 10 to give you 140. 40 soaps at 2 naira each, which is 80 naira. Less the discount, 220, and it will get 22 naira. When you sum up 220 plus 22, you get 198 naira, which will be transferred to the outward accounts as 1,446 naira. This is our ledger. Our October sundries is 1,446 naira on the credit side. Coca-Cola, the returns will be on the debit side, which is 1,248 naira. PZ Limited account, our returns outward, 198 naira, which is on our debit side. Sales return journal. The sales return journal is used to record goods returned by customers. It may be due to wrong color, wrong tribe, inferior quality. Return inward book is entered, immediately goods are returned. Immediately these goods are returned due to inferior quality. Due to anything that is wrong with the goods, you immediately open an account on sales return journal, and the customer's account is immediately credited with the new goods or with the amount paid for. Journal proper. It is defined as the daily records of transaction. A journal is used to record transactions on a daily basis. It is used for opening entries, correction of errors in accounting. Then we have the cash book. This is a double entry account used to record cash transactions and also transactions with the bank. A cash book is used to record transactions by cash or by bank. It is a subsidiary book, and also it performs the functions of a ledger. Then, my students, I am done with today's lesson. And before I leave you for today, to be expected in the next lesson, I'm going to leave you with these two assignments as beginners of financial accounting. Give brief explanations on subsidiary books. Give me brief explanations on subsidiary books. I explained what's a subsidiary books. I gave you the reasons and I gave you the divisions. I just need you to give me a brief explanation on this. Number 2, explain what is a journal proper and also what is a cash book. Number 2, explain what is journal proper and a cash book. If you are done with my assignments, you can send it to my number, which is 081-8269-2515. I'll repeat my number again, 081-8269-2515. I remain Mrs. Blessing Ayubo Samson. Stay home, stay safe, and please keep learning. Thank you for listening. Thank you for watching, and God bless you.